Hello, my fellow extraordinary Americans. My name is Cosmos Dar, and this is Extraordinary America. What is Extraordinary America? Well, you see, America has always been about freedom, opportunity, and the pursuit of happiness. However, most Americans are not free when it comes to the financial front. Most Americans are suffering from financial slavery due to loss of jobs, stagnant wages, inflation, and debt. Wealth and income inequality is the norm now, and the middle class has all but disappeared. So Extraordinary America is about the abolition of financial slavery. It is about the financial freedom of the 99%. It is about the nation of immigrants and the descendant of immigrants restoring the extraordinary within themselves and setting themselves free. The path to financial freedom is through financial education. It is through becoming entrepreneurs and investors on the light side. In this podcast, I interview fellow Americans who fought against the odds. Many of them came from humble beginnings to see how they did it. It is my hope through these interviews that the extraordinary within you shall awaken and that you will abolish financial slavery from your life and realize the American dream. Once again, welcome to Extraordinary America. Welcome back to the show, my fellow extraordinary Americans. For today's guest, we have Frederick Weiss. Frederick is a business owner, investor, managing director, markets trader, and advisor. He's the chairman of Cedus Fund One, a fund that utilizes AI-based technology to help execute equity and fixed income ETF arbitrage trading strategies, which are previously only available to large asset managers, large proprietary traders, and hedge funds. He's also the managing director of Frederick Weiss and Associates, a boutique legal services company which specializes in legal support mainly with court reporting and legal videography to the worldwide litigation community. They also engage in discovery proceedings in the European and Asian arena. Frederick is also an investor who seeks to invest in or acquire SMEs in Western Europe, the UK, North America, and Southeast Asia. He's particularly interested in profitable companies where the owner wants to exit that have revenues in excess of 2 million. Frederick's impeccable wisdom, experience, and knowledge in the fields of finance, business, and market trading make him extraordinary, and I'm honored to have him on the show. Frederick, are you there?
Hi, Cosmos.
Hey, Frederick. Thank you so much for taking the time to do this podcast with me. I'm really honored to have you on the show.
I'm
So,
flattered by your introduction. Thank you.
so, Frederick, can you tell me and the audience a little bit more about yourself, your background, and how you got started in the field of business and finance?
Well, I was born in the deep South in the United States, and my parents moved my family out to California. Now, I was educated in California, and I started out in business at a young age, in my early 20s. Uh, and of course, I was happy to make my first million by the age of 22 and promptly lost it at 23. So I learned early on that making money is only one thing, keeping money is another thing. I went into several other ventures while I lived in California. One of them with a Southern California mortgage banker, Aetna Finance, and we put together whole loan packages through Drexel Burnham, Bear Stearns at the time. I was offered a job to come out to New York to work for Bear Stearns in their whole loan department, which was the one of the premier investment banking houses, along with Drexel back in that time. So that dates me. Instead, I chose to acquire a public. We now call them SPACs, with a partner from New York, and we did what's called a roll-up, which was basically acquiring assets and companies. We executed about 15 million in transactions, and we had another 100 million under letter of intent. We had some oil refineries in our portfolio. Unfortunately, at the time, we ran into some difficulties legally with the previous owner of our SPAC. So I learned another lesson at that point: is always make sure your legals are in place. After 5 years of litigation, we gave back all the assets we had acquired to all of our investors, and we said, okay, we're not going to do this anymore. I then decided to come on out to Europe, because I heard people live a long time out here, and they took 1 to 4 months a year vacation. And being from California, if I would took 2 weeks a year, I was lucky. So I've been now in Europe since Y2K, about the turn of the century. I actually unwound a deal I was in to buy a medical services company in San Rafael, California, just to be able to move out here and have a clean start in terms of not having to fly back and forth to California for business. So I decided to enter into a business out here, which was my sleepy little business I learned when I was 18, which was court reporting. And if you know all of the any of the if you've been in any cases in court, you know what a court reporter is. And
Mhm.
so until COVID broke out, I was happily taking 2 to 4 months a year of holidays, mainly in Greece because I'm a Greek citizen, and just having a wonderful time out here in Europe, with America being my distant memory. Then COVID hit. All of a sudden, I had no business. No one was flying anywhere. And I was scratching my head saying, what am I going to do with my life now? And I remember that old hat I used to have in California called merchant banking. We called it merchant banking back then, which was basically acquisition of assets and companies. And I decided to put on that hat, and I affiliated with a group of people who were experts in this regard. I had a number of deals that were under letter of intent at the time, but they were all outside of the country, in the UK or in the US. And I didn't really find anything that made my heart sing. Do what you love and the money will follow. Do what you don't love, and then you have to figure out how you're going to manage what you don't love. I didn't want to be flying all around the world managing different entities because I have a young family here now, and I wanted to stay home with my wife and my child. Um, so I turned down those opportunities and decided to ally myself with a a partner. I've been a part-time trader in different kinds of markets for the past 30 years. And I was looking for someone who had something unique, something high tech that incorporated or potentially could incorporate AI and machine learning to be able to handle the changing volatile environments of what we're living through right now. And COVID was a tremendous black swan event for many different industries. And if you just look at the hotel industry, the airline industry, the cruise industry, and so many different industries that were decimated by COVID, and this kind of thing let the door open to, well, you know what? Maybe this isn't the only time this can happen. Maybe it can happen again. So if it happens again, I want to be prepared for it. And I met a number of business owners that had the opposite experience, such as those that dealt in online sales. Like in Amazon. Amazon flourished incredibly during the COVID times, and all the online retailers who carved out their niche, selling worldwide, were doing absolutely fabulously through the COVID times, and still are. Um, Another group of industries that did well was the money management industry, because inflation started to take off more. I won't get into anything political, except that since 2020, everyone knows, and I don't need to report what everyone already knows, is that we have experienced unprecedented inflation from the last decades. And what a dollar was in 2019 is not what a dollar is anymore, or a euro, or a yen, or any other currency. So my initial goal was to democratize something that would not just keep up with inflation, but beat inflation, so that people could do what the Bezoses and the other people of the world that are in the right industries are doing, which is beating inflation. And last September, I found a gentleman in Charlotte, North Carolina, and he has been in an industry for 25 years. That is trading investment grade bonds, municipal bonds. He's opened high frequency trading firms as a consultant for companies such as Tudor, and he has started stock exchanges. He's got a lot of deep experience in the bond, mainly the bond industry, and also equities. So we decided to form a joint venture together, because he had been knocking his head against a wall, marketing his wonderful investment grade bond strategy, which is completely automated. and which is returning incredible yields. He traded it manually himself, just plunking away on a keyboard, 2017, 2018 for 1 year. And he had a 30% ROI in that 1 year, completely trading it manually. So he stood out. And then, of course, COVID hit shortly thereafter because he basically proved that was his proof of concept. He proved his concept there. This works, and it works actually in any market. So during COVID, he basically took 2 years and learned how to code, and he coded everything that he knew about trading, portfolio management, risk management, the most effective utilization of capital at any one point in time, and so many other factors that go into a successful strategy. And he put it all together, and he tested it, and he back tested it, and he kept testing it and testing it. And he got it to the point where it ran optimally. And since 2021, of course, he's been doing back testing on it, and the back tests were showing 70%, 80% per year. He started marketing this to large banks such as Wells Fargo, Bank of America, different large banks in the United States. Talking to the trading department, the head of their trading department says, "Hey, look what I have. This is wonderful. You guys can make so much more money than what you're making now, because if you go on BlackRock's website, any iShares, any large bond house, and you look at what their yields are, most of them are negative. They're negative 3%, negative 20%. The portfolios are all underwater. And the reason for this is when they trade a bond, they actually buy it and they hold it. Well, everything's been eroded in terms of credit. So most of the bonds that were bought a few years ago are all underwater. So if you invested $100,000, you've got 80,000 now, or 85. Some of them have come back, but by and all, they're all basically underwater, meaning below the actual amount of investment. What Paul has done is turned that all on its ear and come up with this fabulous program, which is now showcased on our 2 apps, which can be downloaded from the App Store or the Google Play Store. And we have actually 2 programs. One is for investment grade bonds. The other one is for stock trading. And they're both based on ETF arbitrage, and they both trade similarly. We were in a meeting with investors yesterday from the UK and around Europe, and Paul started up the demonstration system just in the stock trading, and we saw the system take a number of positions in the marketplace just yesterday. By the end of day trading, the just that 1 day's trading showed an alpha, or a return on 1 day, of 2.24%. Now, if we annualize that, that's over 580%. And for the month of October, our stock trading program netted after fees 41.76%.
Wow.
So we have a vehicle to not only fight inflation, but to beat inflation and to build wealth by allowing funds to compound, not taking out profits, but allowing our funds to compound and build those funds, just like the big hedge funds do. If you studied any big hedge funds, they take in investors' money, they trade it, they make incredible returns, 60%, 80%, sometimes over 100% per year. And after a few years, they stop taking money. And in another couple of years, they give back all their investors' money, and they shut their doors, and they just trade for themselves. We are looking to democratize this as much as we can at this point. Since we're new, we haven't gone through, any kind of a United States Securities and Exchange Commission approval of a public fund so that we can take small investors' funds. So the only thing we're really doing with anyone in the U.S. is managed accounts.
So Frederick, one of the things that you bring into account is beating inflation. And that's one of the reasons, like, I love having the show, because you better than anyone else understand how
inflation works, right? Especially when it comes to our savings account. Because a lot of people, they're like, say, they try to save money for like, let's say like retirement and everything, right? They have a savings account. They're putting like, let's say $1,000 a month or whatever. But inflation is eating away at their savings. And many people are not aware of that. Like they don't realize that it's like the purchasing power of the dollar or of like any currency that ultimately matters, right? Like you have a $20 note and you go to the grocery store, how much stuff can you buy with that? Because like when like let's say a lot of people are trying to retire, like they're going to realize that their money that like they have to still go back to work now because their all their savings got eaten away, especially after COVID hit, and then they printed about $3 trillion or so, give or take, into the economy, you know?
Yes, I remember when I was a kid, gasoline was 25 cents a gallon.
Wow. Wow.
And I would go with my mother to the grocery store, and she would have two carts full of groceries, and we would get out the door for about, and this was like 2 weeks groceries for about $30. So things have totally changed since I was a child, and things have totally changed in the last 10 years as well. Retired people especially have been hurt very badly, simply because you're on a fixed income. You don't have the opportunity to go out and, go from a $50,000. I think the average wage right now in the States for a full-time person is what? I'm not quite familiar with the average wage, but since a minimum wage is at what, $15 an hour right now, the average
It was
professional
it,
wage.
it's $15 in some states, I think, but I think it was like seven and a half for the seven and a quarter for the longest time. But I still have
Mhm.
to check whether they raised it to 15 or not.
Right, right. So, I mean, if a person has owned a house, let's say in the last 10 years, they feel pretty good right now in terms of their equity because housing as an asset class has benefited tremendously for the common person. Now, if you're just wanting to save your money and buy a house now, that's a very difficult thing to do. Not only because houses are so expensive, but because now interest rates have been rising, that they have no choice but to raise the interest rates in order to try to stem. That's the only real tool in the box for central bankers to tame inflation. They don't think about balancing the budgets and, like we have a checking account. We know we can't spend more than what's in our checking account, so we budget ourselves. The governments don't do that. They say, what did Barack Obama say? Deficits don't matter. Because we can print all we want. We can print into oblivion, which is actually what they've done. So as you rightly pointed out, the purchasing power of the dollar has been eroded tremendously, and it's affected mainly, obviously, the whole retired segment of people, and the young person just starting out, living with mom and dad, wanting to move out and get their own place. It's really, really difficult.
So one of the things that I wanted to mention over here, right? Since you talked about like you were offered like Bear Stearns, it just reminded me of like the 2008 2007 recession. But the beginnings of that, right? Since we're talking about baby boomers retiring versus like the new generation, like back in the baby boomer generation, which was in the 1950s and 1960s, they were still on the gold standard, right? Like till 1971, August 15th. The $35 an ounce, like one gold ounce was equal to $35, right? Like they had to peg it to a gold ounce and they had to have a certain amount of gold. So what most people don't realize is that after 1971, August 15, Richard Nixon took us off the gold standard and our currency became a fiat currency, which means that they can print as much as they want to like basically fund whatever they want, whether it's the welfare program or it's wars or whatever. But there was massive inflation in 1970s, and then in 2008 when the recession hit, the way they solved it was by printing a lot of money. Like the solution is all this printing a lot of money, lowering interest rates, but that just creates a bubble in everything, and it's eventually going to pop. And a lot of people are not aware of that. So I don't know, like what are your thoughts around how that is?
Well, I like to look at people that have studied history and learn from them. For instance, Ray Dalio. He's retired now. Of course, he headed the largest hedge fund in the world. Um, and He's studied a number of different empires of the past. The closest example in time to what we see happening right now with this slow-moving crash of the worldwide economies, fiat currencies, was the Weimar Republic, and that probably
Oh
brings
yeah.
back some memories, where the inflation was happening, or maybe even more recently, places like Zimbabwe, where every day it was inflating as much as it's inflating by 1 year here, and people eventually were carrying home their day's wages in wheelbarrows. And this happened in Weimar Republic, and this was unique to the Weimar Republic because the people in France, right next to the Weimar Republic, who were on the French franc, had a completely different economic structure. When the Weimar Republic crashed, these people were completely broke. A lot of the French came in and bought up German properties, German businesses, and became very wealthy in the ensuing years. And basically what Ray Dalio is saying right now is, are we headed for a Weimar moment? Well, it's a very slow-moving Titanic ship, but we all know that the value of the dollar is eroding and is continuing to erode under the current administration and the current Federal Reserve policies, and that we will have a correction, a very large correction at some point. When's it going to happen? Well, I'm not going to take my crystal ball out. If your listeners want to find that out, they can draw their own conclusions by listening to the many opinions that are out there. But when it does happen, those who are holding cash or gold or diamonds or precious metals will be in a very good position to purchase things for much less than they're currently going for, sometimes pennies on the dollar. So that's what Ray is recommending right now is it's time to start holding cash.
Yeah, I mean, here, like, that's something that I was doing a lot of research upon, and you bring a very good point regarding the Weimar Republic. For people that don't know, like, the Weimar Republic was the period of time in Germany between the First World War and the Second, and the time that Hitler assumed power. And the reason why Hitler assumed power was because of massive inflation, and then there was followed by a depression, and like there was like people were starving on the streets, and then they came up with a solution. But in the process, fascism came to Germany. And what most people don't realize is that economy matters in everything. Like people have to earn a living and all of that. But yes, you're right about gold and silver, and like even cryptocurrencies, like they help to protect your purchasing power. And the question I wanted to ask you, Frederick, was how should people save, like to protect themselves from inflation? Should they be investing in precious metals, or should they be learning strategies on how to, in regards to the markets and the stock markets and all of that?
Well, let me back up just a little bit before that. Is the biggest enemy to the common person right now is debt. Because if we're paying off our debts at 18%, 19% interest, uh, we're really not in a position to save money. So I think for the individual person, it's important to have a dual strategy. If you're in debt, you can avail yourselves of the concepts of the richest man in Babylon, and you can seek actually financial advice to budget your money so that you can start saving money on your frivolous purchases, stop making frivolous purchases, and start paying your debts off and saving as much money as you can each month, and starting to live by the principle, when I bring home money, the first part of the money that I bring home is for me to keep, and the rest goes to paying my mortgage or my rent, my debts, and my insurance and food and the necessary things of life. But the first piece of my money is for me to keep. And if your listeners are interested in learning more about this ancient principles, you can pick up The Richest Book in Babylon from Jeff Bezos' firm, or go to a bookstore and learn about it.
So for those
Uh,
that So for those that don't know, like what is like the basics of the richest man in Babylon, like other than like putting investing in yourself first.
Well, personal economics really matter. If we have $100 in our checkbook, that's how much we have. We can't print more money. And if we think about, well, I have to borrow money to live, then we have a problem. We have to learn to live uh, more reasonably, which is a difficult task in an inflating environment. But a person that budgets and starts to live, let's say, on cash and keeps a record of everything they spend. How much do you smoke? How much do you spend on cigarettes? Do you go out to eat? How much do you spend on going out to eat? Do I really have to go out to eat? Maybe I can pack a sandwich, when I go to work. Little things all add up, and at the end of the month, being able to carve away at least 10% of what you take home for your savings, which is there not to touch but to accumulate. And so by getting your own financial house in order, all of us need to do this individually because we're not central banks. We need to keep our house in order. Then we put ourselves in a position as a saver to feel better about ourselves. And as our self-esteem about our personal financial situation gets better, we can start lifting our head up and educating ourselves about what is it I'm good at, and look for, we can call it a side gig. There are many, many side gigs out there. Having a multiple source of income, we have our job, but can we really develop a side gig where it eventually can replace our job or double our earnings and increase our savings so that we can build a stockpile of money, a small stockpile that we can seek an investment, one that the principal will be safe, and two, that will give us a reasonable yield greater than that of inflation. Whether it be, buying a deed of trust, and purchasing these deeds of trust. If you really understand real estate, you can buy discounted deeds of trust and make much better than inflation yields. That's one area. It doesn't require as much capital that, let's say, as getting into, trading investment grade bonds.
Mhm.
But it's about studying and doing things, as Warren Buffett says, things that you can understand. Warren Buffett spends his all day just reading through his financial reports of companies, not only the companies in portfolio, but he's been doing this for the last, I don't know how many years. I don't know how old Warren Buffett is, but probably the
Pretty
last 60 years.
pretty
He's been
old.
doing the same thing. Well, people say, well, I want to be like Warren Buffett. Well, to be like Warren Buffett, you need decades and decades and decades, because Warren Buffett is he's an icon of investing. In his particular way, but he makes a lot of very good points. And the most important thing is, what is it you love to do? What is it you understand? And do your research. We all have the greatest library that the world has ever seen right now in our fingertips. Do we spend it on Facebook, Twitter, uh, you know, all of the different social medias, wasting our time away? Or we can use that to research, to find out what other people are doing. YouTube is an incredible resource. You can take 3 months of spare time and you can learn anything on YouTube, to the point where you can decide, yes, I would like to look into getting into this, maybe as a side gig. So it's about and it can become a daily process. With me, when I wake up every morning at 5 o'clock, I light my candle, I set it on the table, and I meditate. Well, a lot of people aren't into that, but I like that because it makes me calm. And I think, where am I at? How do I feel? What kind of ideas do I have today? The greatest idea machine ever made is the human brain. And if we
Yeah.
allow ourselves a time every day just to sit with our own human brain, and let it flow with ideas and write down, every day I'm going to come up with 10 ideas. Doesn't matter if they're stupid. Doesn't matter. No judgment at all. 10 ideas. How can I get a second gig? And just write those ideas down. There's a number of authors that have written books on it, and of course, here I keep talking about books. Becoming a reader of how other people have become successful is a very important thing.
Like what books would you recommend that
Oh boy, now we're going off the top of our head here. There's a fellow, there's a guy in New York with big hair, and I have my Kindle right here. I have my Kindle right here, and I will look at the books that I have in my library that I can recommend. Yes. What a great
Thank you so
idea.
much.
Cosmos. My current two books I'm reading one is called Momentum, which is how to build personal momentum in anything. The other one is called Deep Work, something that social media and all of our internet contact is doing away with, is the ability to concentrate deeply on any one subject. Is because our attention span has become minimized to the point of what's the average attention span now? 12 seconds?
Maybe even less.
Um, let's see, monetizing apps. Okay, let's see. No, yes, James Altucher is perhaps you're acknowledging him as an author. He wrote a book on the power of no, and let's see. If you research James Altucher, Altucher, he wrote a number of very well written books on idea making. And many very wealthy people subscribe to this as, how did you make your wealth? Well, I first started living on what I was making and saving money, basic thrift, the old Horatio Alger stories of, the person who had two jobs and they started saving money and they guarded that. And then they saw things that were opportunities and they went into it. This is the way America was built, and this is the way that America can come back. Unfortunately, our government is giving us the wrong example in spending, and it's making everybody's lives go upside down with trying to keep up with how much it costs to live. So those are my basic thoughts.
So Frederick, I wanted to add upon that, right? Like, so if you take a look at 1950s or 1940s America, and even up to the certain part of 1960s, like you could have a father that was working at like a manufacturing job, and you had a mother who was a housewife, and you had two, three children, and you could actually live of one person's income. So what happened was the wages remained relatively the same. Like it did not match up to inflation. Like once we went up the gold standard, the inflation was higher than like basically call it, I don't know if you call it stagflation, where you have stagnant wages or wages that don't catch up with inflation, and then you have inflation that keeps going. And so now you had two people that had to earn an income in order to maintain the same lifestyle, and then you had to take on debt, like a lot of consumer debt, and you had to take credit card bills, and then it's one thing after the other, and that's what I think reduced the overall life. Like that's how we got into the position that we are in, like because they eventually just printed so much money and they just circulated in the economy, and then that's something that I realized, because before when you had sound money you could just live off one person's income, but now you need to have the father and the mother both work, and also, and in spite of that they have to take on debt on top of that to maintain the same lifestyle, because it's easier to like spend first and then pay later, right? Like it's kind of like, it's really kind of like, it's almost like a ruse, like where, oh, it's easy, just take this 0% interest for like 12 months, but then later on you realize the credit card bills are like racking up. But that's the idea that came to my mind. That's the thought that came to my mind.
You bring
Like,
back you bring back memories, Cosmos. I grew up in that kind of a family. When we were living in Florida when I was a young boy, my father worked for a Swiss company called Nestle, and he made an income. My mother stayed at home and took care of my sister and I. That was the way it was. But as you say, the cost of living was stable and things were affordable for a one income earner. Then we decided we're going to move out to California back in the 60s. Of course, my father got a new job with an insurance company. His wages weren't, relatively speaking, as high as they were. Plus, California was a little more expensive. My mother had to get a job. So both my parents were working at that point for a couple of years. And my father's wages went up. My mother was still able to stop, but that was before we went off the gold standard. Um, but by the time we went off the gold standard and we got into the 70s, I was graduating, getting my education, and didn't really realize the significance of the events that had happened the prior 10 years. Like you say, the Richard Nixon taking us off the gold standard. That was a very quiet announcement, but it had long-lasting implications for the wealth of the middle class.
yeah, I mean, yeah, you're saying.
So anyway, we're in a situation now where it's an upside down world from the standpoint of costs versus income for many people. So it really does require a personal growth because the old standards of thinking about money have been replaced
Like
by
like
a
I
new
just
need.
like I just feel bad for like the people that are retiring and then they go into their savings account and they realize, oh, I have to go back to work now because the banks just printed. Because a lot of people blame it on this and that, oh, immigrants, this and that, but they don't realize that it's their own banks that's inflating the money away, you know? And the root cause of it is like some would say like Keynesian economics or like basically like deficit spending or like lack of sound money principles. But yeah, like a lot of people need to know that they're losing their lifestyle because of the loss of purchasing power, and that's something that Extraordinary America like hopes to educate to the people. So I'm actually really glad that you understand this, because this is really important for people to know, you know.
Yes, you bring back the memory of what my all-time favorite book is, which is a book written by the famous Ludwig von Mises called Human Action. It's larger than the Bible, but he does a PhD deep dive into all of the things that we've been talking about and the natural cause and effect of what we've been seeing with the economy. Um, and he also talked about the Weimar Republic and many prior empires before that, as Ray Dalio has done a study. So, my advice to someone who's looking for a way to better their lives is to increase your skill set. Now the skill set of coding is these are all six-figure jobs that you can get once you get skilled in coding in a particular way. You can work at home, you can make your six figures, you can work for companies, and there's more of a need for coders than there is actual people that can code. Now, some people can't code. A lot of people can't code. I haven't learned how to code. I'm going to have to do a deep dive in it. I mean, I know the law, but learning how to code is a gift that is a skill set that a certain segment of people will be able to learn. Just
Yeah,
as an example.
I mean, I personally learned coding in college. I was never a fan of it, but I always knew that it made good money. But you're absolutely right, Frederick. People need to like, I know it's hard, but they got to learn new skill sets in the constantly changing economy. And even like crazier than this is, like in the short term, it's going to get worse because of automation. Where like like a lot of people are saying, and I think you might know something about this, like because you're into AI based technology, right? And so like there's thoughts about like automation taking a lot of jobs, but I don't know like what your understanding of that is.
Oh, it's happening as we speak. Automation over the next decade will make many current jobs uh, similar to the old horse and buggy, where there simply won't be the need for them. For as I mean, the new AI based portals such as ChatGPT. I absolutely am in love with ChatGPT. It saves me so many hours every week, and mainly for writing. If I'm writing copy, if I'm in the process of writing a book, and it's helping me to outline different chapters in the book, which will be 21st century ETF arbitrage, and just using it for our daily lives to better ourselves. Um, the technologies that we have right now can greatly enhance and improve our efficiency.
Yeah, I mean totally, like automation and AI, like they'll be the future, and people have to go into this new world. Like it's just been a drastic change from like the era of the 1950s and 1960s to like the 21st century.
Mhm.
Yeah.
Yes, and the human mind itself is an incredible AI in terms of its ability to reason, to make logical choices, and to make choices based on judgment. They say that Elon Musk talks about the dangers of AI and it taking over, and perhaps he's right, in many respects. But I think we're decades away from much of that. But the human brain directing the incredible data collecting ability of AI and the fast machines that are now coming out that can operate at the nanosecond level, processing almost 1 trillion calculations a second. This is something that, at least, in the industry that I'm in, will completely do away with manual traders over the next 10 years.
So Frederick, there's a question I wanted to ask you for, like, so that the listeners can understand. Can you tell me and the listeners a little bit more about arbitrage and how valuable it is in like business and like market trading and all of that, and like the
Well,
concept of it?
well, arbitrage. I mean, the farmer arbitrages. If he's growing his soybeans and he wants to lock in a certain price, he will go to the futures market because he knows he has a crop coming due in the harvest season, and he wants to lock in a certain price that he knows he can get. So he's got a physical harvest, which he will hedge or he'll arbitrage with a futures contract, which will be on at or about the same size as what his harvest will be. And in this way, he can protect getting a certain profit for his harvest. And this has been the Japanese perfected this hundreds of years ago with the rice markets. Arbitrage with what we're doing is we basically trade what we call delta neutral. So we'll buy something that's like Warren Buffett says, you want to buy something when there's blood in the streets, and you want to sell it when there's euphoria in the clouds. And this principle applies to real estate. I remember picking up real estate like Monopoly chips back in the 80s for pennies of what they're going for now. I was buying one house a week, and people were just about giving them away. Well, if you sat and you were able to collect your rents, make your mortgage payments, and just hold on to the asset, now there's lots of wealthy people out there who just did that one thing with 2 or 3 houses. With what we're doing with bonds and with stocks, whenever we buy something, blood in the streets, whenever we buy something that our algorithm says is dirt cheap, we'll buy it, and then immediately we'll sell the index. So when we buy the stock or the bond and we sell the index with the equal amount, just like the farmer, what we've created is a spread. And all we're looking for the spread to do is to just come together, for the underpriced value purchase to come closer in the spread to the index itself. And then we close out the trade. Our average trade time for stocks is 5 days. And we'll turn over investors' capital 500 times in a year. Now imagine 500 times turning over my capital in a year with a 70% win rate and making this last month 41%. We did 2.24% yesterday, just in one day, doing a demonstration for investors. And every single position we take is an arbitrage position, meaning a spread trade. Now, on the opposite end of the curve, something which you can do with stocks and with bonds, you can borrow a bond or borrow a stock and you can sell it short. So something that's wildly overpriced in comparison to its peers, we sell short. And then at the same time, we buy the same notional value of either, let's say, the Russell 2000, which is the stock index which we trade on, or we trade on the LQD iShares, which has 2,500 investment grade stocks. The best companies in the world trade on the LQD. It's run by BlackRock, and we trade only BBB plus rated companies. So we will sell short that security, and at the same time, we buy the same notional value of the index, which is basically what we call buying the spread. Now, that really confuses it because you're selling the security and you're buying the ETF. And we're waiting, again, for the spread to come closer and back to its relative value. Our maximum holding time with a bond position is 10 days. and then we close it out. With bonds, we'll turn a portfolio over about 250 times a year.
Frederick, that's actually pretty disruptive overall in your industry, if you think about it, you know?
It's so disruptive, nobody in the industry is interested in getting involved.
Wow.
Why? Because they're doing everything manually. You know, grandma has always cut the ham edges off on both sides of the ham. Therefore, that's why we do it, is because that's what she did. In other words, custom with banks and financial institutions who are making money. They make money on their management fees. They don't want to change what they're doing. Well, they're going to have to lay off a lot of people. You know, giving people pink slips is hard. It's really hard to lay off people. And, you know, there was a recent conference in Barcelona. All the big names, you know, multi-trillion-dollar bond funds, you know, BlackRock and the different other bond funds were there. And they all agreed together that AI is a long ways away in trading bonds, that still
What?
the manual trader rules the roost. And I
Are
read
they
that article.
delusional?
This was just in Barcelona last month. They all
Uh-huh.
agreed. And I clapped. I said, "Oh, that's great. That's wonderful. I love it."
So you clap because now that's opportunity for you guys to disrupt, right?
But isn't that the way life works?
No, no.
Somebody else's stable way of doing things, which has grown old because of the advance of technology and the advantage which COVID gave us, which was time, and we used the time wisely. We have something that's disruptive. And each of your listeners can come up with something disruptive in their own life that can individually carve out a second source of income as well. And, you know, the minimum amount which we can take in our managed accounts is 110,000, so that we can get enough of a margin with our prime broker to be able to make these kinds of returns.
So Frederick, as a continuation of this, like, is there any project that you're working on right now, like that you'd want the audience to get a glimpse of, in addition to this?
Well, if you take a global view of what's going on in the economy, you know, of course, now the political influences on economies are overpowering. And we are 1 year away from a general election. Typically, 1 year away from a general election, everything is rosy with the stock markets. Well, we saw what happened this last week. We had the greatest bull in the last few years in the S&P. Just the last 4 days was, I believe it was the largest 1 week increase in the S&P for a number of years, several years anyway. And so between now and the elections, when the new president will be announced, whoever that will be, the present economy is under the control of the administration and their colleagues over at the Federal Reserve. So they're going to do everything in their power to keep the stock market moving. So everything looks rosy for the stock market. For the consumer, it doesn't look so rosy at all because he doesn't have $1 million portfolio or a $20 million portfolio that is performing well, like the major hedge funds do, like we do. But once the election's over in, say, 2025, there are a number of great minds that are saying, including Ray Dalio, who's saying, now cash is a good thing to hold. Why? Because there will be opportunities coming soon, which, you know, from an investment standpoint, whether it be real estate, whether it be stocks, whether it be really any asset class that will be affected by a great correction, that will be, we say, once in a generation. We don't say once in a lifetime anymore because lifetimes seem to move so much quicker because of the information age which we now live in. And that will be a great wealth creation opportunity. And this goes all the way up the scale from the normal consumer type investments such as real estate and small stock portfolios to acquiring companies. There's a record number of baby boomers who have built successful businesses that will need to sell their businesses and retire simply because they have to. They're getting old, and they will unfortunately have to sell their businesses for a bit less, especially if they haven't done proper financial planning and have had to take on debt recently, which of course is much more costly than it was 3 years ago when everything was running at, you know, when you're running a 0% Fed funds rate, money flows and it's cheap and everybody gets used to it. Those days are over for a while.
Yeah, I couldn't agree more. Like right now, it's like what, 5.5% federal interest rate. Like
We
eventually,
think that's high. Well, it's not high. I mean, when Paul Volcker came in back in the 80s, the Fed funds rate was what? You've studied recent history very good. I think it went up to what, like 18% or 15%? I don't remember what the Fed funds rate, the numbers there, but it was 3 times as high as it is now. People think, oh, interest rates are so high right now. They're really not historically.
like from for the previous decade, right? Like 2010s, like where they put it at, like after like between the 2008 and the end in like 2022, like there's a period of about 10 to 14 years where the interest rates are really low, like 0.25%,
Right.
0.5%, 0%. And people like the Gen Z generation like grew up with interest rates low, like money was just coming in cheap, and then this things are just being inflated away over time. And yeah, like nobody really they haven't been used to a 5.5% interest rate. From your perspective, yeah. But like for the Gen Z, like they're like, wow, 5.5%. So a correction is in order, this can only lead to like a downturn in the economy over a period of time.
Well, 5%, 5.5% is, from a historical perspective, a very fair interest rate, if not low.
That's the ultimate irony, isn't it? People are talking about this being high, but yeah, you're right. In the last 15, 20 years, just because we have had really extraordinarily low interest rates, like between like less than 1%, like, and for an extended period of time, people have just got used to it.
Mhm.
But so Frederick, how can the audience connect with you and get to know more about you and your work?
Well, they're welcome if they have uh, interest in finding out about our trading strategies. You can go to our site at quantiverse-ai.com and learn a little bit about Paul, myself, read our investor decks. We have videos that we're posting there fairly regularly since recently. We can learn about ETF arbitrage. When we come out with our book, we'll be happy to offer it to your listeners at a discount. And I would suggest for listeners who are starting sort of at a base level saying, I'm in debt, I'm not making enough money, and I need to get out of debt, and I need to start fighting inflation in my life and building some wealth, then the different resources which I've mentioned would be helpful as a beginning.
That is awesome, Frederick. Frederick, I'm so grateful that you took the time to do this podcast because your wisdom and knowledge in like finance and markets, like I could go hours asking you questions and I would still not run out of questions to ask. Like there's so much in that mind, but like this is like a 45-minute to 1 hour podcast. So I have to like stop for now. But it was an
Is
honor.
that how long we've been going? Oh, and I didn't prepare for this. This is all spontaneous, Cosmos.
No, I know, I know. But like, yeah, you're so knowledgeable about all these things, and what you're saying is right. And so, yeah, it's an honor to have you, and I'll be grateful to have you on the show at a later time.
Well, I'm I'm happy that I've been able to spend this time with you on a Saturday afternoon.
Yeah, thank you so much. And I want to conclude this show by letting my fellow extraordinary Americans know that, hey, look, there's an extraordinary within each and every one of us, and it's our duty to awaken it and unleash it. Until next time, bye for now.
Hey there, everyone. Thank you for watching Extraordinary America. If you like what you see, please do subscribe to our podcast and share it with others. Remember that the best investment that you can make in your lifetime is in your own financial education, for it is knowledge that truly sets you free. Also remember that your purchasing power is being diluted through inflation, and then the practical thing to do is to protect the loss of your purchasing power by investing in precious metals or the right cryptocurrencies. Also, never forget that you are an extraordinary American. We'll see you in the next episode. Bye for now.